Hey everyone, thank you so much for joining us today for another episode of Your Competitive Edge with Baird & Warner. Today we get to sit down with Heidi Rogers. Heidi is the assistant managing broker for Baird & Warner Oak Park River Forest in the Chicago area. Thank you for being here, Heidi.
Oh, thank you for having me, Lauren.
Well, today's topic is really interesting. It's investors versus homeowners, which makes me laugh because it sounds like it's a bit of a smackdown.
Right.
That is not the case. In fact,
Not at all.
it's really about helping agents understand the difference between investors and homeowners and maybe even pivot to working with both.
Yeah. Yeah. And I think each one of them requires a different skill set, a different type of broker. Um, Even within the investment role, when you're
Right.
talking about the investment segment, you first have to identify what type of investor are you looking to work with,
Okay.
because there are several ways to invest in real estate.
Well, take us through that. What are the different ways to invest in real estate?
Well, as I said, I mean, so many different ways you can invest in real estate, but the three that I think are the most popular that most brokers will come in contact with are, the first segment are the buy and hold investors. So those are the landlords, those are the ones that are not less necessarily looking for an immediate payout. They're looking for a payout over time. So those investors are looking for properties that have good rents, low maintenance. They're more, as I said, looking for a return on investment over time. So that's a whole different segment of investors,
Gotcha.
and their needs are a little different than the next segment of investors that I'm probably the most familiar with, which are the rehabbers slash flippers.
Right. Yep.
Those are the investors that are looking for more of an immediate payout. They're not looking to buy and hold this property. They're looking to do a value add, fix the property up, put it back on the market, and make their profit, move on to the next project. So again, that's the segment of the investment market, and I'm probably the most familiar with. That's where I have most of my experience. So their needs are a lot different than someone that's looking to get all cash out over time.
Right. Right.
And the third segment, which is a completely different animal, and those are the developers. Those are the investors that are building from the ground up. They're doing new construction. And so that broker working with a developer is completely different than a buy and hold or a rehabber, because their commitment level with that developer is so much longer. If you're building new construction or a new project, a townhome community or a condo, that project could last 2 to 3 years, and so you may be at the ground level of helping them identify the plot, where are they going to build, meeting with architectures, helping them draw out what is the schematic behind what the investment project. And then once that project gets started, you're pretty much selling off of blueprint.
Wow.
You don't necessarily have a product, an actual physical product to sell. So, if you're a broker, you have to be familiar with how to sell blueprints, how to read blueprints, how to select finishes. So, that's a different skill set.
Absolutely. Well, let's focus on your skill set, because I feel like when we talked a little bit earlier, you mentioned that this is probably the gateway, right, to working with investors is working with flippers and rehabbers. Can you talk a little
Yeah.
bit about that? How did you get started?
Well, I've always, I came out of a business background. My background is in brand marketing. So it just lent itself to the investor world because, they were speaking a lot of my language, ROI, return on investment, cap rates, these were terms that I was already familiar with because of my background. If you're new to the market and you don't have a business background, it doesn't mean you can't jump into that that arena. It just means you need to learn their terms. You need to be able to understand that world. And if, in my world, if a developer said or a flipper says to you, what is the ARV, and you don't know what that is, you're not going to connect with that investor. And an ARV is an after rehab value. So you just need to understand the terminology, and you need to understand how they think in order to service them.
Gotcha.
And so how I got started was, I met one investor, I found a product that I thought was a great opportunity for someone to do a value add and then turn around and sell the property. And I found that one investor and gave him that property, sold him that property. And then he started working with me more and more over the years. And then after I met that one investor and started building a portfolio with him, pretty much all my other investor clients found me. Because they're keeping an eye on the market as well. So they see what I'm doing. They see that I'm finding these great properties and helping this investor, resell that home.
Right.
So, they then get attracted to you.
Yeah, absolutely.
You don't have to do a lot to get investors. They'll find you.
That's really interesting. So talk a little bit more about the difference between the investor buyer and the residential buyer, because they have very different needs.
Yes, they absolutely do. When you're a traditional buyer, you're really just looking for a home for your family.
Mm-hmm.
So you're not necessarily crunching numbers to see, of course you want to get a good deal, but you're not necessarily crunching the numbers to see if you can, cash out on this home in 6 months. So you're much more, sensitive to locations, schools, other intangible things that would never really necessarily, not to say that an investor doesn't think about schools and that kind of stuff, because for resale, it could be good, but they're more looking at what's my return on investment. So you may not be in the best of school districts, but if I can show you that properties are still selling for a great return in this market, that investor is still going to be attracted to that home. So I think that the scope of how you evaluate those properties are completely different. Mainly because, as I said, as a traditional buyer, you're looking for a family home, a home for you to enjoy every day. This investor is not looking to move in. So, as long as you can show them the numbers and that it financially makes sense for them, they're going to be attracted to that project.
That makes a lot of sense. So talk a little bit about that relationship, because it's a little different. We often hear about the relationship is the business. You nurture your clients, you stay top of mind, you be valuable. It's a little different with investors. Can you talk a little bit about that?
And I think that you touch on a really good point. I think that is probably the second biggest difference between working with a traditional client versus an investor. And I tell this to a lot of the agents in my office, that the investor is loyal to the deal. They're not loyal to the agent. And we're not used to that. We're territorial. When we get a client in our grips, we do not want to let them go. And so the idea of them talking to other agents just scares us, keeps us up at night. So, that's not something that other agents are looking to do. What we're looking for is, commitment to us. We commit to that investor. As I said, with most of my investors, we've worked for years together. But I know they're still cheating on me. I know they're still out there working with other agents. And I had to get used to that as an agent that works with investors, because I can't be everywhere. Mm-hmm. And if I have an investor that's doing 20 or 30 flips a year, I don't even have the capacity to find them 20 homes that they can flip. And I don't know every market. So the one quick way of losing your client is to take them into a neighborhood or take them into a project that loses them money, because chances are they're not going to come back to you. No one wants to lose money. It's one thing to break even. It's one thing not to make as much as you projected. But when they start losing money, you do that too many times, you're not going to get that investor back in your corner. So you're better off sticking to your neighborhood, sticking to your area of expertise, and get your 10 deals, get your 9 deals, or whatever it is that you get, whatever your market share of their total portfolio is, take it and run.
Right.
Versus, as I said, trying to be greedy, trying to get all 20, and then you put them in a position that they don't make money. And as I said, you'll end up not only losing that investor, you lose your 9 or 10 that was a safe bet. So stick to your lane.
Stay in your lane. That
Yes.
makes a lot of sense. You're loyal to the deal. That's a really great distinction.
Yes.
So for a residential agent, a traditional agent, how would you map out getting started working with investors? What's step one?
Well, I think, and that's a really good question as well. I get that a lot. How do I get started? I say, one, learn the craft. I kind of threw out a couple of terminologies and stuff. Learn what are their sticking points. And then the easiest way to really jump into the investment pool is to find projects. Don't look for the investor, because if you find the investor and you don't have the project, you're not going to keep them. So find a product. Find a property that you think would be a good, flip. It could be in your neighborhood. It could be other agents in your office. Just start looking and identifying properties that you think would be a good
And
flip.
Heidi, what are they looking for? Like, is it turnkey, or is it like you can see the potential? What are they keeping their eye out for?
That is the most important piece of it. Is as an agent that's playing in that arena, you really have to be able to identify the potential of a property. I get this all the time. Investors included say, find me an off-market deal. They hate finding stuff that's listed on the MLS, the multiple listing system. They want to find something that is off-market because they think they can get a better deal or they don't have to compete for the business. And 95% of the projects, and I've done quite a few flips in my career, 95% of those projects I have found on the multiple listing system. And a lot of agents are like, how do you do it? It's because I can identify those properties. I know when I can see a 2-bedroom home that can turn into a 4-bedroom. I can see, this ranch style could now be a 2-story home. I can see, oh, this has a huge lot. We can expand off the back and turn this home into, instead of 1,000 square feet, it now can be 2,000 square feet. So you have to be able to identify that property. It doesn't always come very cookie cutter, and that's part of the experience, is being able to look on the MLS, and every agent would have looked at the same listing and would have passed over it because it's a 2-bedroom, 1-bath with a tiny basement. And I'm the one that would have noticed, like, I can blow the roof off and we can take this up, and now it's 4 bedrooms, 3 baths. And instead of this home being worth 200, it's now worth 5. So, that's part of the skill set in working with that particular investor, is being able to identify that opportunity.
That's right. So you have to be able to pick it out and kind of bundle it up and then bring the deal to the investor. That's
Absolutely.
great. Okay,
And not only bring the deal, you have to show them what the potential would be. So you're almost being a fortune teller, because I had an investor pick up a property in my area 3 months ago. And so I'm predicting, it would take about 6 months for the rehab to finish. I was predicting the beginning of 2020 what the potential and the price point would be. But guess what? There's no crystal ball that told me there was going to be a pandemic in the beginning of 2020. So now we're in the midst of a pandemic, and that investor is now having to figure out, what do I do in this environment? Are my numbers still legitimate? Are they still strong? Do I put as much into the home, or do I bring back some of the things that I was going to do because, I may not get that money back out?
Right. Okay. So you mentioned the skill set of having the vision. What other skills are important when you're working with the investor community that our audience should think about? Oh, I should brush up on this, or I'm not very good at that. What would you say are the skill set?
I think outside of, as I said, identifying the opportunity, you really have to keep up with the trends. What's trending right now in the marketplace? You also have to be a strong negotiator, and not just, when you hear negotiation, you're thinking across the table, with the other buyers or the other agent. But you're dealing with a client base that have flipped or have been in the business for a long time. They probably have done more deals than you have, over their flipping careers. They probably have done more deals than the agent that's sitting across from them. So, you really have to know your craft, because you're negotiating with some very tough negotiators. Most of them have their real estate license. Almost all of my investor clients have their real estate license. They want access to the MLS. They like to go and see properties on their time. They're early risers, so sometimes, they're in homes at 6 a.m., so they love to have the access to the MLS, and they almost all of them have a real estate license. They just don't practice. They know that's not their expertise. They know they don't have the same reach as a Baird & Warner. So they still will put a line item in for a professional real estate agent. But as I said, as an agent, you're butting up against another agent who's been in the business a lot of times for a lot of years, have sat in a closing table for many times, and seen different scenarios. So again, you need to be a strong negotiator.
That sounds like it. Yeah. So it's so interesting, so different than a residential client.
Absolutely.
I mean, you're talking to somebody who has insider knowledge, who's licensed just like you are. So how can the agent compete? What do you differentiate? What do you do to differentiate yourself and say, I am that line item for you? What do I bring to the table?
Well, I know the market.
Yep.
They don't know the markets. They know some, but they don't know the market like I do. I live and breathe in this market. I know what the buyers are looking for, because again, I work with traditional buyers as well. So I know when they walk into a home, what are the things they're looking for. I have the reach, I have the big established brand behind me. So most of them are mom and pops. They, single agencies.
Yep.
So they don't have the same kind of marketing reach that I would have and Baird and Warner would provide them. And I have the knowledge. I work with multiple investors, so they only have, insight on their projects. I have insight on multiple projects. So I can look across multiple markets. I can see across multiple projects and give insight to each one of them. So those are the things that they appreciate that I bring to the table is my value add and my experience and my background. As I said before, real estate, I was in business. So they definitely appreciate and obviously put me on their balance sheet, because they see that there's a value add there.
Fantastic. So there is a little overlap. There's overlap in that you have to bring value to the table. You have to demonstrate your value and you have to deliver on the value.
Yeah.
That's the same with a residential buyer versus an investor, but the
Absolutely.
stakes are a little different.
Yeah. And the commitment, the commitment to the home is a little different. As an investor, the investor is really looking at the investment vehicle as a means to an end,
Yes.
which is for their return on investment. So they're not moving into this home most likely. They're just looking at how much will it put, whether it's a key, someone who is a buy and hold, a flipper or a developer, their eyes are always on the end goal, which is my return on investment. Versus for a traditional buyer, that's not always the end goal. Will my family be happy here? What is my status in my community? There are other things that come in to play with a traditional buyer. If you're selling your parents' home or your grandmother's home or your home that you grew up in, the stakes are different.
Yes.
You're much more committed, and you will take things a lot more sensitively. Because this is personal for you. It's not just about the money. So if you're working with a traditional buyer, it makes sense to write a nice note to the seller and say, my buyers are going to love your home as much as, your parents did or you did. That goes a long way with a traditional buyer who loves their home and loves the home that their parents had. So they don't necessarily want to see someone who's not going to care for the home in the same way move in. The investor could care less, they could, that's just not the motivation for them. At the end of the day, if that person who's not going to keep up the lawn moves in, but they pay them their money, they're happy with that.
Right.
So yeah, the stakes are different. They just, as I said, the commitment level or the connection to that home is different.
Very good. That's great. What did we miss? What else does our audience need to know? I feel like this is like the best time for this conversation because I'm sure there are agents out there thinking, okay, didn't see this coming. Yeah. And now I have to broaden my reach. I have to pivot a little bit. I have to work with a different class of buyers. So I want to get started. So what did I miss that they're going to need to know to hit the ground running?
Well, I think if you're going to jump into it, we mentioned a few things, learn the craft. You really want to start understanding their terminology, find the products. But if I can give a bit of caution is, I am all about finding your niche in every business. Find your niche. Mine have been investors. I've done well with them. But I've also kept my hands on traditional buyers. The pulse, I need to know what's going on with the rest of the marketplace as well. It makes me a better client agent for an investor because I know what traditional sellers and buyers are going through and looking for and that kind of stuff. So it helps me stay current with what's going on in the marketplace. But unlike the traditional side of the business, the investor side is not economy proof. Investors start back getting nervous and start backtracking when the market gets bad.
Right.
So if all of your business is tied to that one segment, When that segment starts getting shaky, you will not have any business. Versus on the traditional side of, I feel like it's economy proof, mainly because people always need a place to live. So it may change where they live. Maybe they're not buying as expensive of a property, or maybe they're renting versus buying, but they always need a place to live. An investor doesn't always need an investment project.
Got it.
So if you're going to do that, do it, but don't abandon the traditional business as well, because I do think you need both. One, for sustainability, and then two, it helps you become a better, it both helps with each other. The insight I get from working with investors definitely helps me with my traditional buyers as well.
Fantastic. Well, that's great. Well, I feel like we've delivered a whole lot of value today and great information about anybody who was wondering who would win in the smackdown between homeowners and investors. The answer is everybody.
Hopefully it's the real estate broker that's helping both.
Exactly.
Everyone involved should win. So yeah, as I said, if you're doing great and can show value add to both segments, I think you become a relevant agent.
Fantastic.
But this was great discussion.
Yeah, thank you so much, Heidi. This was really, really helpful. Thank you very much for your time.
Great. Thank you.
Take care.